Hi guys, this is Bilal and welcome to my YouTube channel Forex Billionaire. So before start of the video, I just request you to go on the bell icon, subscribe the channel, like the video and share. Thank you for that. So today our topic would be candlestick study, three pattern candlestick study, and it would be the part 3 of the video because we have done single candlestick pattern, double candlestick pattern, and today we will learn about the triple candlestick pattern. There are a lot of triple candlestick pattern, but the one I like the most are three white soldiers or the three black crow. This is the most mine favorite as well as the most important and the effective candlestick pattern right now until now in the three candlestick pattern. So I will tell you how to trade on this pattern as well, and I have done some back testing of this pattern as well. So I will share the result of that back testing as well, so you can also do back testing on your trading accounts as well, and you can see the result. And I think this is the most effective and important candlestick pattern in the three candlestick pattern I've ever learned. So just move on to that, and I will show how we can find out the candlestick pattern, the three white soldiers. Okay guys, so you can see here the three white soldiers. So basically three white soldier is a bullish candlestick pattern that is used to predict the reversal of the current downtrend in a pricing chart. So let me elaborate it for you. For example, the market, you can see the market is in a downtrend. Okay, the market is going down continuously. Then there you will see there will be a swing candle. It could be a red bearish candle or it could be a green candle. After that swing candle, then there will be three white soldier candles. So you can see there are three bullish candles. And how can we predict that these are three white soldier pattern? All of the three candles are closing above each other. For example, we can see the first candle. Okay, just assume that the closing of this candle is $4. The second candle is closing above the close of first candle. So if first one closed $4, the second one closed at $8, and the third candle is also closing above the high or the close of the second candle. So the third candle, for example, closing at $12. So this is a bullish pattern, and we call this pattern as three white soldier. So when we will find out three consecutive bullish candles, all three of them closing above high or close of each candle, then we can say that this is a three white soldier bullish reversal pattern. So in first we can see the market was in downtrend, then we will see there will be a swing candle, and after that swing low candle, then there will be a forming of three white soldier candles with all three of them will be closing on the high above the high of each candle. I will show you that on the chart as well. So now we will move on to our second pattern. It would be three black cross. So guys, here you can see three black cross. It's total reversal of the three white soldiers. There you will find out the three bullish candles. Here you will find out the three bearish candles. The same, the market was in uptrend. In three white soldiers, the market was in downtrend. You will find a candle. It could be a green swing candle or it could be a red swing candle. The color doesn't matter, but you will find a swing candle. This type of candle is called as a swing candle. And after this candle, you will see three of bearish candles. All three of them will be closing below the close of last candle. So for example, this candle started at 4, this candle started at $12, closes at $8. The next candle closes at $4, and the next candle closes at $2. So all three of them was closing below the close or the low of previous candles. So this is the most effective, I can say, that the candlestick pattern I have ever saw. So I will show you on the chart as well, so you can find out this pattern is easy to find out, honestly speaking. And I've done back testing on different time frames. So we will move on to the chart and I can show you there. So here guys, you can see I'll find out some examples for you. 3 white soldier pattern. So the market was in bit downtrend. Okay, then you can see that there is a candle, a swing candle, and after that you can see there is 3 white soldiers candle. All of them are closing above the close of previous candle as well as the high of previous candle. For example, this was the high of last candle. It's closing way above the high of previous candle. This was the high of the second candle, and the third candle also closing above the high and the close of the previous candle. So this is a valid 3 white soldier pattern. And now where you need to take a trade, that's $1,000,000 question. Once you predict that this is a 3 white soldier pattern, and once the pattern is formed, where you need to take a trade, this is the time when once the third candle closed, after the close of the third candle, you can take a trade. That's the time to take a trade once the candle is closed. And what should be the stop loss and what should be the take profit? So we can see, we can go for the long position. After the close of the third candle, here you can put your entry. What should be the stop loss? Your stop loss should be the low of the previous candle, the last candle, the low of the swing candle, and then you can move up to like 1%, almost a 1%, or yeah, 1/1 ratio in this form would be fine. Like 1/1 risk reward ratio would be fine in 3 white soldiers. Now we can see other examples as well. There are some other patterns just like evening star and the morning star as well, but they are not, for me they are not that much authentic patterns. Why? Because it's not easy to find them on the chart. But this white soldier and black crow pattern, you can find them easily on the charts. So I'm going some back of the chart because I have done some testing and I will show you the result of that testing as well. Here you can see another pattern. The market was in a downtrend, okay, and then you see a swing candle here, you can see it, and after that there is a formation of 3 candles. You can see here formation of 3 of them, and once the confirmation is done, there is a swing candle, okay, and also you can see that swing candle is a hammer candle. And you know that once you find out a hammer, we already read that it's a reversal, trend reversal candle. You see this is a hammer, and after that hammer there's a formation of 3 white soldier candles, 3 bullish candles, all are closing above the high of the previous candle. And after this you can take, here on the third one you can take your entry, and stop loss would be the low of the swing candle, and the take profit would be 1/1 risk reward ratio. You can increase the risk reward ratio to 1/1.5, but for me 1/1 is enough in this pattern, because once these 3 candlestick pattern, this 3 bullish candles you will see, after that market will take some rest and it needs some push to go higher. So 1/1 risk reward ratio would be fine in this. Now we will see other examples as well. So here traders, you can see an example of 3 black crows. It's totally a reverse of 3 white soldiers. This is basically a bearish reversal pattern. You can see here it's a swing candle, or you can say hanging man. It's the same candle, hanging man. We have learned about this candle in a single candlestick pattern. I told you before that as well, this hammer, hanging man, shooting star, inverted hammer, these are the most authentic and the important candles you will see on the bottom or the top of the chart. Here you can see this three bearish candle, the strong three bearish candles, all closing below the low of the previous candle. After this confirmation, you can take trade on the low, on the close of the third candle. Once you put the trade, the stop loss would be the high of the swing candle. This will be the stop loss of your trade. And what should be the take profit? I will go with 1/1 risk reward ratio in this candlestick pattern. So you can increase your take profit as well, but 1/1 it would be safer side. So now we can see the result of this candlestick pattern. I have back tested for like 1 year chart on different time frames. Now let me show you. So guys, here you can see I've backtested this candlestick pattern. So in a 4-hour time frame, the 3 white soldier trading strategy results 32 trades in a year. I find out only 32 trades in 1 year if I go with 4-hour time frame. So 22 was winning trades, 10 was losing trades, and 70% was the winning percentage. You will say, yeah, 70% is a very good winning percentage, but you are only getting 32 trades in a year. That's very low. So we need more trades in a year. So I back tested on 30 minutes time frame, and the results are I got way more than that. 6 times more than the 4-hour time frame. I got 185 trades. 143 was winning, 42 was losing, and the winning percentage also increased by 77%. And this is a very nice percentage in this forex market if you have 77% winning ratio. And every time you have to go with 1/1 risk reward ratio, and your lot sizes should be same. So if you are winning 77% with the same lot sizes and as well as the same risk reward ratio, so at the end of the year you will be earning a very respectable income, a very respectable profit. So guys, this was all for today. So today we learned about the 3 candlestick pattern, and there was some other as well, as I told you, morning star, evening star, and more of that. But for me, the most authentic one is that 3 white soldier. Other patterns, it's very hard to find out on a chart. You will get the examples on the books. You will get there are many traders who are giving you examples by the books. They will never show you on the live charts, because I know that it's very hard to find on the live chart. Things are different from a book, from the live chart. They just put the copy paste thing, and they will just show you the cut paste of books. There's so many books, and you will see, but when you come to the live trading chart, it's different. The things got different. You have to use some indicators as well but this pattern, without any indicator, I told you the basic thing of that. Whenever you want to go with want to see 3 white soldiers, you have to see on the bottom of the chart. If the market is going downtrend, you will find this pattern, 3 white soldier. And if you want to find out the bearish pattern, 3 black crows, you will find out on the top of the chart. So that's all for today. Okay, so traders, so today we learn about the 3 white soldier and 3 black crows. It's a 3 candlestick pattern. For the next video, we will be learning about the different chart patterns as well. So this candlestick pattern, the single, double, and the third candlestick pattern has come to an end. Anyone joining now, you can see the previous videos as well. So from the single candlestick pattern, you can learn about this. and stay tuned for the next video so we can learn about the chart patterns as well. Thank you. Bye bye.